Hi, welcome back to my channel. I'm Joe Luca and I am your host. Today we're going to be talking about mortgage basics. Buying a home is one of the biggest financial decisions you're ever going to make. But before you sign on the dotted line, you need to understand the basics of mortgages. In this video, I'll break down what a mortgage is, how it works, and the key terms you need to know so you can feel confident about your home loan journey. Now, first, a home mortgage, it's simply a loan that you take out to buy a home. Instead of paying the full purchase price up front, you borrow money from a lender, a mortgage company, a bank, a credit union that's local to you, and agree to pay it back over time, usually in monthly installments. Your home, the actual structure, that acts as collateral for the loan, meaning if you don't pay, they can take it from you. Okay. Now here are some of the most important basics that you really need to know. One, principal. That's the amount of money you borrow. So if you buy a $500,000 house, you put 10% down, you're borrowing $450,000. That's your principal. Next is interest. This is the cost of the loan, the cost of that money expressed as a percentage rate, usually now 4, 5, 6, 7, maybe 8%. When I first bought a home, it was in the nines and tens. Down payment is the percentage that you're putting down. In my example, if you're putting 10% down on a $500,000 home, that's $50,000. Term, this is the length of your loan. It can be 15 years, 20 years, 30 years. We have 40-year mortgages. That's your choice. And then we have fixed and adjustable rate mortgages. Fixed means your interest rate stays the same for the whole term of the loan. So you have a 30-year loan, your rate stays the same for 30 years. So your payment for the mortgage, the principal and interest, will not change for 30 years. If you include taxes with that, then that part will change. Understanding these terms is crucial because they directly affect your monthly payment and the total cost of your loan. Now, there are several types of mortgages. There's a conventional loan. This is not backed by the government. It often requires a higher credit score, okay? And the interest rate can be a little bit higher. And then we have FHA loans. These are backed by the Federal Housing Administration. Great for first-time home buyers, people maybe that have some challenges on their credit, don't have a lot to put down. Their interest rates are usually lower than a conventional rate. Then we have VA loans. These are restricted to veterans and active military. No money down loans, lower interest rates, no PMI, private mortgage insurance. Great product. And then there are USDA loans. These are designated for homes that are in rural districts, and they also offer lower interest rates and usually no money down. Choosing the right loan product depends on your financial situation, your credit score, and your long-term goals, and then also where you're looking to buy a home. Now, before applying, here are some tips you should think about. One, check and improve your credit score. If you have good credit, try to make great credit. If you have fair credit, try to get good credit. If you have crappy credit, try to improve it so it's good credit or fair credit. Next, save for a larger down payment to reduce monthly costs. Pay down credit cards and car loans. Compare lenders. Don't just take the first lender's offer. Talk to your real estate agent. They will recommend reputable, reliable, ethical, local lenders. Okay, that's important because a bad lender, a lender with a bad reputation, can be the difference between having your offer accepted and having them accept someone else's offer. Next, understand closing costs and fees. Your real estate agent and your lender can give you a deep down dive for what those are in your situation. Next, use online mortgage calculators, not online mortgage companies, mortgage calculators. So if I were to buy a house at this price and put this much down at this interest rate, what would my monthly payment be? That way you get an idea. When you talk to your lender and they pull your credit, they'll give you an accurate number for where your monthly payment is going to be. Now, mortgages don't have to be intimidating. With the right knowledge, you can make informed decisions and move one step closer to owning your dream home. If you found this video helpful, please hit that like button, subscribe for more financial basics, and share it with someone who's thinking about buying a home. Thanks for watching. Take care. Bye-bye.